both Michael and Sarah to today's recording. We have Sarah Timmons. Sarah is the social media manager for the World Council of Credit Unions. She's in a very cold Madison, Wisconsin right now. And Michael Mori, I say your last name right, Michael?
Yeah, that's correct.
Michael's in Boston, and he's also freezing right now. And Michael, you're a graduate student, right, at Tufts University?
Yeah, that's right. I'm at the Fletcher School of Law and Diplomacy studying international business and development. And
that's actually part of a fellowship with MasterCard?
Not exactly. I am a fellow with the MasterCard Center for Inclusive Growth, but that is sort of they're associated with our school in the sense that they provide sort of funding for research and whatnot. But they don't necessarily sponsor me as a student here. They sponsor my research.
Excellent. And you've done some excellent research. Yeah. So, Michael, you, Trevor, and I, we met actually in Istanbul a few months back at a mobile conference, and it was rather interesting. I was up on a panel, and we were talking about millennials in general, and I asked the audience, and these were global banking, credit union, co-op representatives, and I asked them how many had actually heard of Venmo, and I believe yours was the only hand that went up in the entire audience, which at that point I knew you were a millennial and was happy to talk with you. And we had a great conversation around financial services, specifically targeted to your demographic. Both you and Sarah, obviously, are millennials. In both your situations, interesting because you've got a very strong background when it comes to financial services, the two of you. And Michael, from a credit union standpoint, you would be the exact type of customer they would love to bring in. If I'm not mistaken, you're coming up on your graduation. I think it's in May.
That's correct. Yeah.
So are you actively in the job hunting space now?
Yeah, pretty much. I mean, that's it more or less.
So there you go. So this will be a nice part of your resume then,
right.
In putting this out.
So you're right at the transition age of who we're trying to attract. So this is kind of perfect.
Yeah. I mean, it's interesting because I feel like, people sort of in my boat, like the reason that we bank is a little bit different than the reason that like our parents and our parents' bank.
Mm-hmm.
We, especially throughout your 20s, you don't really, generally speaking, make enough money to save. So that's not a big component of it, to be honest.
Mm-hmm.
But hopefully that'll change when I graduate.
Yeah, it's very interesting because study after study will show that you kind of set up your banking relationship in the period that you're in right now, right, in your 20s as you're in college. And it's not that you have a wealth of income that's coming in, but you're on that cusp, right?
Yeah.
I mean, let's look at you, Michael. You're about to graduate from about to be a grad student coming out of Tufts, and you'll be going into the workforce, so you're a prime candidate again. Mm-hmm. And that's what we'd like to do in this call is talk about, for you, what banking needs you have. This is an opportunity, let's be perfectly blunt, to talk directly to credit union executives, board members, product owners.
Sure.
And I think that's where we'd like to focus in on. What drives you from a product standpoint? How would you select between a large bank, a community bank, or a credit union?
Yeah, no, I'm really happy for the opportunity because I think the only way that sort of the banking sector is going to really sort of engage with at least my segment of the market is by like going out and talking to people and actually getting their perspective and understanding both their needs and their frustrations with the current services that they use so they can outcompete them. Really, I'm a Bank of America user. It's not like I'd actually prefer not to be, in all honesty. But the reason I am, and it goes straight to that question you asked, what drives my banking needs, and really there's a handful of things. Like I said, it's not savings, it's not interest bearing accounts or anything like that. it's really, I think kind of three big things. Paying off credit card and paying utility bills. So I want to do that very seamlessly. I never use my debit card to actually make purchases, both for security reasons, because if the information is compromised, there's a less clear sort of recourse or resolution mechanisms than there are with credit cards. So that's one of the reasons I never use my debit card. The other reason is because credit cards offer rewards, so I like to just tap into that. So I just use my bank account essentially to facilitate paying off my credit card, which is what I use for almost all of my purchases, including online purchases. But I also use my bank account for peer-to-peer transfers. Originally I liked Bank of America because most people were on Bank of America, so I could transfer with friends and family really easily. Now that Venmo, is huge, I use Venmo probably 4 or 5 times a week. There's some sort of pain points with that, specifically the limitations on the transfer size. You can't transfer over $1,000 a day, and that is for sort of splitting a bill at a restaurant, no big deal. But as sort of your core peer-to-peer transfer banking service, it doesn't really cut it, I find. So I still keep Bank of America for that reason. But as I said, I don't really use it to save. But I could also talk about sort of the product and service features too that I kind of like if you want. Oh, hi. Thank you.
and where does she bank?
Yeah.
Say credit union, just lie.
Yeah.
I hate my bank.
Well, there you go.
This is Rachel. This is my girlfriend.
Nice to meet you.
Hi.
This is Sam and Sarah. Rachel's Bank of America as well. And you have Stanford Credit Union, right?
Bank of America, but I pay incredibly huge fees on those accounts, which I hate. About $25 a month usually. And then, I had Stanford Credit Union when I was there, and that was wonderful. And I still have $500 in that account, but it just sits there. Yeah.
And so everyone that listens and watches this understands we did not prompt her whatsoever to say
No,
that.
we swear.
None of those comments were paid for or solicited. That was all for free.
She's not sponsoring the World Council.
So, I'm curious, do you also use Venmo?
I do, yeah.
And how often a week, just out of curiosity? Is it 4 or 5 times a week?
Yeah, probably 4 times a week, 4 or 5. Yesterday, for example, I didn't have cash on hand and I didn't want to use my credit card because I'm running a balance on my credit card, so I used Venmo with my friends instead of splitting the card bill. That was really nice.
That's nice.
And I live with roommates, and so we use Venmo to connect our expenses, and that way we can just use a spreadsheet to keep track of things and then expense each other and keep each other accountable.
I love those comments because you'll read a lot in the press and other studies of how millennials or college students don't understand their financial picture. Michael, you already killed that talking about debit cards.
Yeah, you know everything about that.
Yeah.
So
The comments you just made about using a spreadsheet to track your balances, I think that's an excellent message going back to the credit union executive board members. There's 2 folks in college doing what probably their parents aren't, using a spreadsheet to track their expenses and manage it.
And what I've always found is honestly, the less money you have, the higher the stakes. If you make a mistake, it's way harder to sort of recover. So you have to be more careful. I think you pay more attention to your finances if they're marginal. And I think that we all try to manage them and micromanage them with our friends. We're very social, so we're sharing lots of expenses. But the great thing for me about Venmo is that it removes that social awkwardness of splitting a bill or asking for a payment, because you just simply send out a request, right? You can add you can tag it as whatever you want. You can make it silly, make it funny. And it kind of removes that weird stigma, the things that people like to avoid. Dinner table conversation, for example.
Yeah.
are you going to get tip, or am I going to get tip, or what's this going to be?
Yeah, exactly.
How many viewers did you have?
Yeah.
I think that that part of it is fascinating. Michael and I were talking about that when we were in Istanbul, and we were talking about Venmo. We had a large number of people in the room, and we talked about the social aspect of the spend. You could see across the room people kind of shaking their heads, and they were all my age and above, going, "No, never happen, never work."
Yeah.
Funny.
Yeah, it's true.
And for us, that was like the clinch pin.
Yeah, it was just like you knew immediately, like, oh, this is great. This is something I want.
Yeah.
So for the credit union product owners who are listening to this right now, you might want to write that down. There's your phrase. It's the clinch pin of what sold that service.
I love it.
Can use that in your business case. And you, if a bank or a credit union offered that type of service, to where you had that social aspect on your spend, would that actually be something you would use? Because you're not talking about a disruptor, if you will, right? Or a non-banking entity.
Mm-hmm.
Yeah, I think that the social element on it is fantastic, but I think that the interoperability that Venmo enables is absolutely clutch, because it doesn't matter if I have Bank of America and Rachel has a local credit union or cooperative or U.S. Bank or something like that, because it's doing all of that under the hood. It's like taking care of all those transactions, and I'm not charged a transaction fee. Like, I understand that. I generally leave a couple $100 balance in there, like kind of like a float or whatever, and they're probably earning interest on that, but I don't care. It's like completely marginal, and they probably mine my data, and they probably sell it and like enrich that like online profile of me that's being traded around and bonds. But it's I don't really care to be honest. If I always think like with these things, if there was an option for me to like opt out, like pay for the service and opt out of the data mining, in a lot of cases I might do it. And as I move up the income ladder, I do it, but I also understand that like that business model might not make sense, because as I move up the income ladder, my profile becomes more and more valuable, and they'd be less likely to want to offer me that option. But I think like Rachel said, like the social element, and then I think the interoperability are like the key to sort of Venmo's success and adoption amongst us.
Yeah.
So for every credit union executive who listened to that, let me translate something Michael just said to what you're going to read about constantly in the industry. If you reduce friction, that's a buzzword. Lord, that's a buzzword. Reducing friction, making it all under the hood, the Uber, if you will, right? You don't think about the payment part of it.
Right.
So for all three of you, because you're all within that same age demographic, the metadata, so that data about your spend and all that, if that led to more personalized rewards for you, would you give up that privacy?
I probably would. I don't know.
Yeah, go ahead.
No, I was just gonna say it's kind of like social media in a way, because like secretly they know everything about you already. Like there's no going back now. I mean, if it's gonna help with my future decision making, like down the road, if I'm gonna buy a house or whatever it might be, then I would be willing to share my spending habits.
So my thought on that. So I read an article recently about how I forget which company exactly is putting together like psychological profiles based on cookie tracking, social media, etc., Google profiles, and selling them to employers, like sort of like psychometric testing almost, and how that can like impact your ability to get a job. And like just reading that alone has very much, I've always been very conscious about privacy and careful about what I share, but that has like actually got me to stop liking things on Facebook. Do you know what I mean?
Yep.
And also like tagging things on Venmo. I won't like necessarily tag something like with the same kind of like humor and sarcasm or whatever that I would have done before, because I don't necessarily want that information out there, and I don't want to be. I think the key is like that. I'm like a dynamic person, like with like lots of ups, lots of downs, lots of pluses, lots of minuses, and like for somebody to kind of offer like this like static profile of me, it's almost like dehumanizing, and I don't want to enable that. Right.
That
so
makes
for
sense.
me, it's definitely, I don't know. It depends on how great the incentives were for me to offer more.
Yeah.
So in In a matter of 15 minutes, all three of you have destroyed every stereotype of millennials. Thank you very much. That all these studies that folks buy, you just killed every single one of them.
Just talk to us. Just talk to us. Don't send us a static survey with like yes and no, and rank this 1 to 10.
Yeah.
We don't have time for that.
And what was the point you were going to make? You were going to say something?
Rachel, it's nice to meet you.
Hey, Rachel.
I was just going to say that I find that the offering the incentives for having my data profile pretty much already exists for me. So, for example, I look at a lot of health cooking websites and a lot of fitness websites, and when I open my computer, all that I ever see in terms of ads is health and fitness, and women's issues and fitness and how to eat well and that kind of thing. And then of course you'll buy something on Victoria's Secret and you have beautiful women all over.
Yep.
So it's almost like they don't necessarily know me psychologically, but definitely if there was an incentive provided that said like, okay, well, if you agree to have all these advertisements, which I have anyway, and you can also use a special code to get a discount, then I would do it.
Mm-hmm.
It's kind of the Netflix, Amazon effect, right?
Yeah.
Mm-hmm.
By all of your purchases and everything you've done, you get more and more of a personalized experience.
Mm-hmm.
Yeah, exactly. But one thing to go back to, if... See you later.
Bye, Rich.
Bye, everyone.
If like credit unions were to offer some type of Venmo service, like I think the one thing on that is like the interoperability, right?
Mm-hmm.
Right, that's absolutely key. So
I have to ask too, have you ever do you use Snapchat?
Yeah, all the time. I've never used Snapchat's payments though.
I was gonna say, because my little sister showed me Snapcash the other day, and you literally just text the dollar amount that you want through the Snapchat app, and it's like the easiest thing that I've ever done. And now from that point forward, when I've gone out to eat with friends in the last week, we've all just been doing it, and it's easier than even going through an application like through my credit union, for example, where you still have to log in, then you have to click transfers, then you have to enter, the account number or the last name. And like, I was just amazed because, you just set up your profile on Snapchat, which pretty much every millennial has anyways. And then you set up your debit or credit card and boom, it's done. You just text the amount. And I was just shocked. I'm like, I had no idea that existed already, but...
Have you all been talking to teenagers about this kind of thing too? Because I think that their perspective is even more interesting.
Yeah, no,
we've got,
not yet, but we're planning on it for sure.
Yeah, the whole Gen Z, which is what's been tossed around, is
Gen Z. What
classifying
does
them.
Z stand for?
Gen Z, Z as in zebra, is the what they've been tagged. It's fascinating for somebody like me. I'm 48. I have 2 kids who are millennials in college. Then I have 2 who are the next ones.
Mm-hmm.
And I think you're right. With my younger ones, they it's just intuitive. There's no thought about it. It's so like the Snap Cash or Snapchat for them, that would be that makes sense. Mm-hmm. I'm fine. Just don't mess up.
Yeah.
I mean, how do you all feel though? So if I'm a product owner at a bank or a credit union and I'm listening to you, I'm thinking, okay, you just talked to me about Venmo. And then you suddenly switched over to, Snapcash and the turnover of products and how quickly they're adopted and then discarded. So, you go from MySpace to Facebook to now Instagram, and who knows what is next on the horizon.
How do you make it sticky? How do you
Yes.
get people to stay and reduce all the churn and everything?
You've got it.
That's tough.
That is tough.
Give up? It's not going to happen?
I don't think so. I think that at least for not for everybody, I can't speak for all millennials, but I know that at least amongst my peer group, there's the one thing that really makes a product or a service sticky is the ethos of the company providing it. I think that's really a big thing. For example, I know a lot of people who they started using Uber, right? And then, Uber just started basically playing really dirty, with competitors and like trying to pull Lyft drivers off of specific areas with fake accounts and fake requests. And then Uber basically just took this really confrontational sort of approach with regulators, and it was, just like they were playing dirty, and everybody knows that. And so like now, like most people I know, their default is to go to Lyft because Lyft is like nice and like actually has like values that align with like our values, right? And if there are no Lyft drivers available, then you'll go to Uber, right?
It's your plan B.
Yeah, I think that for some of us, like that's definitely one thing that sort of like reduces the churn from one service to another. Then again, like you look at like Facebook and why have or Google, even Chrome. Like why have many of my friends like moved away from Chrome to say like Safari, or moved away from Facebook and to just generally like this diffuse group of other social media products, which happen to be owned by Facebook. I get it; they're all sharing data. But why have we done that? It's because like they're sort of like breaking, like at least in the case of Google, their own rule: do no evil. Like you're just like taking advantage of your market position to kind of like extract as much value from us as possible, like without giving us the choice to limit that. And I think it's all about the choice. Like we want that choice. We're willing to pay for it even in a lot of cases. And I think that this is what I was saying. Like if you offered like an opt-out thing, I think that alone, like regardless of the fact that like 99% of people would never pay to opt out, they'd be like, I still want this for free. Like that would show like some kind of like respect, right?
Yeah, absolutely.
So I think it a lot has to do with like the ethos of the company. But also there's for paid services like banking and whatnot, there are price points. Why do we love Venmo so much? Besides the reasons we already discussed, it's free. That's the other thing. You know what I mean? We don't have to pay to make a transfer. That's huge. And then the user experience, right? It's I think that's another part of it that you can't like discount. Like it's very, very easy to use and pleasure to use, and like looks cool and is beautiful and aesthetic. Like there's everybody wants that, and I think like oftentimes like we discount the image, the beauty, but like that's like to me like I think for a lot of people like there's some kind of like dignity in that, right? You always want to put your best foot forward, your best face forward, and that includes not only like how you dress and like how you take care of yourself and what your home looks like, but the products you use and the services you use. So I think it's like ethos more than anything.
That's
awesome. I would, Sarah, correct me if I'm wrong, but if I'm working for a credit union, then this is what credit unions pride themselves on: is that sense of community, the sense of fairness, the sense of everyone being an owner.
Exactly.
That's an appealing part, but you still have the dynamic of what services you're providing and how easy they are to use. You got to balance the two, and that's tough.
It's definitely tough because, banks and credit unions, they don't have the same availability of marketing. They don't have the same budgets. There's a lot of differences just in terms of assets. So, I mean, they have to be a little bit more creative with how they present their social responsibility to their members. And I mean that's huge to get the word out about how socially responsible credit unions are. They're member owned. They're you have a volunteer board that anyone who's a member can be elected to through elections. And I mean it's cool to think about every person who's a member of a credit union are pooling their savings to fund their loan portfolios. And like just that idea of like making a deposit, knowing that it's staying there is very comforting to me, and it makes me want to be a loyal member. And I think one of the biggest things credit unions need to do better is communicate that social responsibility. Because I've said this before, is like if credit unions and banks are equally convenient, and that, like if they get to that level where they're equally convenient in use of mobile banking, and then credit unions on top of that can prove, through their communicating that they're more socially responsible than banks, then I think that millennials will totally jump on board with credit unions.
I totally agree. Like I've had conversations with friends about like, banks versus credit unions and whatnot, because I'm a nerd. But also because we kind of like many of us kind of grew up during the financial crisis.
Mm-hmm.
Many of us graduated and entered the job market in like 2008, 2009,
Yep.
2010, 2011, right? And that was freaking horrible.
Yeah.
And why? We all understand that it's largely like the financial services lobby, the banking lobby, investment banking lobby, whatever in the United States. Basically watering down, undermining regulations so they can take more risk. Like, we know who caused it, right?
Exactly.
And we know who we bailed out as well.
Mm-hmm.
And still, we use their services. We don't necessarily want to, but it's because they're more convenient. I would use a credit union if I were not as mobile as I am. But I'm constantly moving all over the place. I need to have a broad network of ATMs. I need to have, that's actually less and less the case as more of my transactions are becoming digital. But sometimes you do just need cash. You don't want to pay a $3 or $5 fee to go to an ATM. So I think that's one of the problems. But I think if there was a pure digital play for a credit union, like Simple Bank or something like that, which, by the way, I've been on the wait list for a year or something ridiculous like that.
I'll let Shamir know. He'll ping you.
But honestly, if there was a digital play and you could, because the thing of a credit union is you bring a group that shares an interest or an identity together,
right?
And that could be where I go to school, like Stanford, like Rachel's. That could be where I live, my local neighborhood or my market group or whatever. But I think increasingly for especially millennials who are extremely mobile and very much value motivated and value oriented, it can be around a value, a shared value, a shared belief, a shared system. So I think that credit unions are really sort of a natural place for us to go to bank, but we don't because one, I think most people don't know about credit unions, and two, they don't understand that sort of the social element to it,
yep.
and sort of the values underpinning it. And then three, it's so easy to just end up using the same bank and same bank account that your parents set up for you when you were 16. It's linked to their accounts. It's usually one of the big three banks, big four banks, and it has a very rich suite of products and services.
Yep.
And yes, there are many friction points in using them, but they've gotten better at it over the past 10 years or so. They're not perfect, but they've gotten a lot better at it. So,
I think
that's tough competition.
I think parents are huge. I mean, I thank my dad for being the one who originally taught me about credit unions, because he's a business owner, and when the economy crashed, he got so much help from our local credit union in saving his business, and that's when I was finally old enough to know, what are the differences? What does this mean, Dad? And so he sat me down and explained it to me. And just something as simple as my dad explaining that to me, I was completely sold. I've never banked at a bank just because of that conversation that I had when I was a teenager. So I think parents are huge. Absolutely.
Yeah,
it's interesting the points y'all are raising, because it's funny, some of the information you read about millennials in all these wonderful studies is so just watered down and so generic. It would apply to any generation.
Mm-hmm.
And yet, weaving in and out of this conversation, you're touching on some of those points that are unique about you as a generation. You just hit on that one about very mobile, but being close to your parents. The idea that you have come of age thanks to a wonderful financial crash. An economic situation. I find that quite interesting. Michael, with you, it's also interesting, and we don't have time in this conversation, but we'd love to talk to you again. You actually lived in Indonesia for a couple months in one of the research that you did, correct?
Yeah, I actually lived in Indonesia for a couple of years.
There you go.
Yeah, because, I graduated in 2007, right sort of before the shit really hit the fan.
Exactly.
I thought, well, I'm gonna go and teach English for a bit. Just take a year off and teach and sort of travel. So I did that and went to Italy. And by the time I came back in 2008, just mayhem. Couldn't, very, very, very difficult to find a job. So I ended up looking abroad for work because I had an inclination to sort of travel and have those experiences anyways, like many people in my generation, and there were jobs. This was right as it was starting, so you could still get plenty of work abroad. So then I moved to Indonesia, was there for 2.5 years, kind of riding out the storm and gaining some really interesting skills and experience and whatever expertise that now that 5, 6, 7, 8 years later, whatever it is, was able to use when I returned for this research. Which was really looking at I suppose we were really trying to understand the needs and frustrations of like unbanked and underbanked low income Indonesians. They use a wide range of formal and informal, mostly informal financial services. We were trying to figure out like what are the pain points, what are the unmet needs, and how do these represent opportunities for mobile financial services. And of course, like we're coming at this from a development perspective because we believe in the power of financial inclusion for poverty alleviation and all of this. But we're even given the financial crisis that we grew up in, I think a lot of us still believe in the power of the market, and so we like to think about market-based approaches and solutions for development in this case. But like I said, I think a lot of us very much motivated by values, our values and sort of those sort of underlying norms. And so it's not just a pure profit play, right? Yeah. For most of us.
It's funny. I have written down on my cheat sheet in front of me, make sure you have a good last question. And I had, if you could put you in front of a group of executives globally for credit unions, what would you tell them? And you've just spent an hour listening out about 10 fantastic points that they should take to heart. And actually what we want to do through this series of interviews that we're going to be doing is let's get reality. Let's actually hear the voice of the individuals they're trying to reach. Sarah and Michael, you both did a fantastic job. Michael, we would love to talk to you again, especially about that study you did. I believe it's called Mobilizing Banking for Indonesia's Poor.
That's right.
And it is a fantastic study. We're going to have a link to it out on our blog.
Thanks.
Michael will work to get you a job. We will. We'll have something for your LinkedIn profile.
Yeah.
We'll make sure we have that there. We know how much you love LinkedIn.
Oh, yes.
But really, we want to thank you for your time and for Rachel's time. That was great for the podcast.
Yeah, that was perfect timing. I loved that.
It was wonderful comments. Yeah, definitely. Her credit union. Yeah, her credit union will make sure she gets a nice thank you letter.
Yeah.
That comes across from them.
Yeah.
But again, the two of you, thank you very much for your time. We appreciate it. And we'll make sure, once we get this live, Michael, we'll shoot it over to you.
Yeah. And just to answer that question, the two things I would hammer home for credit union execs or whomever's kind of calling this shots on broader strategy is go digital and base the community around values. Because we're mobile, so it's difficult to base it around a physical location or even a single institution.
Right.
So I think that what ties us together is our norms, our values. So that's what I'd say. Yeah.
Well, again, thank you very much.
Yeah. No problem. All right. Have a great day.
Bye, guys.
Hey, guys. Thanks. It's a great way to end that.